What's going on, guys? We're back with another video today, and today I'm going to teach you how to trade moving averages. Now, the moving average is a very simple indicator, and it is a very helpful indicator for helping you spot opportunities in the market that you can get involved in current trends, trend shifts, and everything in between. It's going to be a great lesson, so make sure you stay tuned. All right, so when we're talking about a moving average, what even is a moving average? Well, all that it is an average of price based over whatever time period you want to look at. So if we look at a 200 period moving average, what you're going to notice is that it is a calculation of an average price over 200 candles, right? Now, if we're looking at a 20, it's going to be very reactive, right? It's going to be responsive. It's going to be a lot faster than the 200 because it is only calculated using the last 20 candles, right? So the higher the time period, the more data it has to collect and the slower it will be to react to price. As you can see, the 200 kind of floats through the middle of price during this choppy price action, while the 20 is kind of like stuck to it, right? It fluctuates up and down a lot more, right? It's a lot faster. But how does that help you, right? That doesn't help you by itself. Let me get into it. There's basically three different reasons that you want to use a moving average, and you're going to need three different moving averages for each one of these, right? They each have their own purpose in the market, and they're all three going to be able to help you improve your trading, get better setups, get better entries, and make more money. All right, so the first thing we're going to talk about is a trend filter. Now, what's a trend filter? A trend filter, all that's going to do is keep you in the right direction of the market, okay? Because the market isn't always going to be moving smooth, right? Like if we're looking right here, we started an uptrend, right? But after this nice push right here, what do? We had to pull back, right? And in these pullbacks, it can be a little bit confusing. Sometimes you can be, is it going to sell? I don't really know. Should I be buying? Should I be selling? Right. And if you're not really advanced in structure and how you understand structure, then it can be difficult. So using something like a 200 period moving average is going to be very beneficial for you. Okay. Now, to get these on your charts, all you have to do is right click. You can go over here to add a it should be right here. Um, but anyway, if you can't right click, just go up here to indicators on your trading view and you can go ahead and type it in. I forget the shortcut, but we're going to get through that. Um, the 200 period moving average. It's going to give you a very clear view of what's going on in the market. For example, if we're below the 200 period moving average, as shown here, we don't want to be looking for buys, right? We want to be looking for sells. And as you can see, that delivers beautifully right here. Look at structure, right? Structure is beautiful. We stay below the 200 moving average. And guess what? We continue to sell all the way down. Then what happens, right? We break above. This right here is the first time that we broke above the 200 period moving average, right? That is signaling the fact that we may be looking for bullish price action. And as you can see here, this is a 4-hour chart. So there was quite a bit of time in here where price went up. It went up 500-600 pips, right? So once this crosses over, and we begin to hold and price above the 200 period moving average, you know that that is your trend filter, right? So I'm going to be looking for buys. And the same occurs here, right? We had this pullback, and for a while we remain bearish. This is probably several days worth of price action right here on this 4-hour chart. Yeah, you're looking at a week and a half of bearish price action, right? And that could have been spotted by using this EMA. And then, as you can see, we began to price higher yet again, and we shifted the trend again, and we got above the 200 moving average, and we continued that for a long time. I mean, we were up here 57 days. I mean, that was 2 months of bullish price action, right? That you could have been involved on if you used the 200 EMA as your trend filter. Now, you can see there are times where we will price below it, but then we reclaim it and we continue, right? So this is a beautiful trend filter, right? It's going to get you into the right side of the market more often than not, right? If we're below it, you want to be looking for sells. If we're above it, you want to be looking for buys. The second way you can use EMAs is what is known as the EMA crossover. So for that, I'm going to put on a 20 and a 50 period moving average. Now you can see these cross over quite a bit, right? And there's a lot of false signals that go out when you use an EMA crossover. But if you pair it with structure and you understand structure, then you can get into some really good setups. Like let's look at this, for example. We had this nice impulsive move, right? We broke structure. We were holding structure all the way down. It was great, right? And then we had this big break of structure right here. After that happens, you understand that you want to be waiting for that retracement, right? And then you want to be buying. So how can we get involved on this, right? Well, you want to look for an EMA crossover. That's a great way to get involved. So you can see we come down here, right? We're coming into this area that we were already looking for right here. And this liquidity sweep, right? This is our area. Boom, right here. We have this EMA crossover, and this works even better on lower time frames. So if we go down to like let's go down here to a 30-minute time frame. You can see that after we tap our POI, we get this nice crossover on the 30-minute time frame, right? 4-hour point of interest, 30-minute crossover right here. At this point, we can go ahead and enter, right? We can get our entry because we came from the higher time frame point of interest, we tapped into it, we crossed our EMA. So you can go ahead and put your stop loss below there, right? And then you can target the high, right? Because that's your long-term target is way up here. And you can see that's a 1 to 7 RR trade. So we can go back to the 4-hour now. Now that we got our entry on a lower time frame using the EMA crossover with the 20 and the 50 period EMA, now we'll let this run and we'll see what happens. You can see it begins to push higher, comes back down one more time, and boom, there we go, right? Up, up, and away, takes off, and there's your 7 RR trade. Obviously taking quite a while to get there on these higher time frame setups, but there it is, right? Got our setup, higher time frame, went down to the lower time frames, got our crossover, got a beautiful entry, and then we were able to take that trade and ride that EMA up there. As you can see, if we throw in the 200, we also close above the 200 and we start to hold the 200, right? That brings me to my final point, which is that these EMAs are a dynamic support and resistance or supply and demand levels, whichever you prefer, right? So what I mean by that, when we get into a nice trend, you can see that we will begin to push higher, right? And we'll come back down and we don't really know where we want to be involved. Do we want to get involved here? Do we want to get involved here? Where should we be buying on this trend so that we can continue? Well, if you use your EMAs like your 20, your 50, or even your 200, you can see that price holds these levels very well, right? When price comes back down, it taps this area, nice doji, and continuation. Comes back down, couple of pin bars, right? And then goes, comes back down, another doji, goes again, right? And it holds this all the way up until it fails. And then what's it do? Comes back in, test it, right? Doji, sells, test, sells, test, sells, right? So these are great areas that you can get involved on a trend. So let's throw on our 200 and put everything together now. So let's look at when price shifted above the 200 EMA, right? So right here, we understand that we're looking for bullish price action, right? We come up, we come back down. So what's our structure, right? Our structure is clean. We got a high, a higher high, and we've come down and put in a higher low. Now what happens here? We test the 200, we form a bunch of dojis, we get back above the 20 and the 50, we test it one more time, we create this doji, we can go ahead and take your entry right there, right? You can put your stop loss just below this 200 period moving average or below here, and you can target higher pricing, which as you can see delivers you with a nice trade. And the same sort of thing happens again. We break structure, we come back down, we're above the 200 period moving average, we come down to test the 20 EMA, we form a nice bullish signal, you get involved, you can put your stop loss below this red EMA right here, which is the 50 EMA, and you can then target this high, which delivers you with another great trade. So hopefully this video was helpful for you guys. I showed you 3 different EMAs and I showed you 3 different uses for each EMA. Now, the number one thing you're going to be looking for is a trend filter. And I think that is the best. That is the most helpful way that I use an EMA is with a trend filter. And that is going to be the 200 period EMA, right? It's going to be bullish when you're above it and bearish when you're below it. And that is where you should be using your trades is with this trend filter. And you want to be in line with whatever the overall trend is, right? The second thing that we talked about were the EMA crossovers. I like to use a 20 and a 50. As you can see, it's quite reliable. And then once you get the crossover, you can then wait for the retest of the dynamic support resistance levels, which are going to occur at these EMAs. So if you throw everything together, right, you have your trend filter, you have your crossover, you have your support and resistance levels, which are dynamically floating as price begins to price higher and lower. So you can wait for price to get above the 200, wait for your crossover, wait for the retest, and then continue to print higher. Hopefully this video helps you guys. This is more of a entry based trading video. It's more beginner friendly. It's not super into price action and in other concepts like that. But if you'd like to learn more about that, we have a free group. I will put it in the link below. I will also link our website. We do have a private mentorship where we go into price action in very, very in-depth detail. And our private signals group is up over 20 RR since starting on August 6th. So we've had a phenomenal 30 days, and our members are learning every single day. We have 3 Zooms a week, Monday, Wednesday, Friday. And yeah, so if you want to be a part of a community, like I said, we do have a free one. Come check us out. And then if you're interested in the private mentorship, we'll have that as well. Feel free to check out our socials and make sure to like and subscribe.